the BRIC nations are, basically building a new monetary system, brick by brick. But it's going to happen. I mean, they're going to supplant the dollar. It's only a question of when, not a question of if. But once we really get, north of 3,000, 4,000, who knows, you're not going to have all that negativity surrounding the gold bull market. People are going to accept that gold prices are going up, how much gold we have. And the rate at which dollars are created is going to increase exponentially in the years ahead. And so gold prices are going to go parabolic.
The BRICS Summit is scheduled for Kazan, the capital of Tatarstan, Russia, from October 22nd to 24th, 2024. This summit marks a significant moment for the coalition, as 5 new countries, Egypt, Iran, the UAE, Ethiopia, and Saudi Arabia, joined the original BRICS members, Brazil, Russia, India, China, and South Africa, earlier this year. Although Saudi Arabia is attending as an observer, this expansion underscores the increasing influence of BRICS in global geopolitics. BRICS has emerged as an alternative to Western-dominated financial institutions like the World Bank and IMF, attracting countries that seek to diversify their political and economic alliances. Through the new development bank, members have access to financing opportunities that challenge the traditional dominance of the US dollar. The upcoming summit in Kazan will likely further the coalition's commitment to de-dollarizing trade and financial transactions. Russia, for example, already conducts 75% of its trade without relying on the dollar, a clear signal of its intent to move away from Western financial systems. One of the most highly anticipated announcements at the upcoming BRICS Summit is the potential unveiling of a new international payment system that could replace SWIFT. Since 2015, BRICS has been actively developing an alternative system to facilitate transactions in national currencies, thereby circumventing the US dollar. This initiative reflects shifting global financial dynamics, particularly among BRICS nations, with Russia steadily increasing its gold reserves in anticipation of fluctuations in the value of fiat currencies like the dollar. According to Peter Schiff, as central banks continue accumulating gold, its price is projected to rise due to the declining purchasing power of these currencies. Schiff points out that those who have sold their gold are likely to repurchase it at higher prices, attracting new investors and further accelerating this upward trend. Once gold reaches the $3,000 to $4,000 range, skepticism surrounding its value will diminish, leading to a broader acceptance of rising gold prices. Now, let's watch the clips from the interview. Before we proceed, please take a moment to like this video, subscribe to the channel, and hit the notification bell so you don't miss any future updates.
The BRIC nations are, basically building a new monetary system, brick by brick. But it's going to happen. I mean, they're going to supplant the dollar. It's only a question of when, not a question of if. The timetable, I think, was accelerated by the Biden administration's sanctions against Russia, which really was a wake-up call to the world that you need to get out of the dollar, that you're too vulnerable. You're basically beholden to the whim of the United States to impose sanctions on you if they don't like something that you've done. That should be particularly problematic for the Chinese, because we're constantly criticizing the Chinese. It doesn't make sense for them to put themselves in this position. So obviously, they're going to be moving away from the dollar. That's why the price of gold keeps hitting new record highs, even though American citizens have been selling their gold all year. So have a lot of other Europeans. It's foreign central banks and people in the BRIC countries that have been buying the gold that Americans have been selling. They're doing it for a reason. They're going to keep on buying it. The price is going to keep rising. Eventually, the American investors who sold their gold are going to try to buy it back. Of course, it's going to cost a lot more money. And people who never bought any gold are going to start buying gold. And so then, the prices are going to start to move up much faster. I mean, so far it's been a very slow, orderly ascent. There's been a lot of doubters, a lot of naysayers. The gold stocks, the silver stocks, are dragged behind very reluctantly. Every once in a while they make new highs, but then they get clobbered the minute gold goes down $50. It's like, oh my God, this is it. It's going to crash. But once we really get, north of 3,000, 4,000, who knows, you're not going to have all that negativity surrounding the gold bull market. People are going to accept that gold prices are going up. And it's really not gold prices going up, it's the value of the dollar and other fiat currencies going down. When our republic was formed in 1789, you only needed $20 to buy an ounce of gold. When we formed the Federal Reserve, well over 100 years later, in 1913, you only needed $20 to buy an ounce of gold. And even as late as 1970, you only needed $35 to buy an ounce of gold. Now you need $2,600. It's not because gold has changed. It's exactly the same. It's the dollar that's changed. It's worth a lot less because we have so many more of them in circulation relative to how much gold we have. And the rate at which dollars are created is going to increase exponentially in the years ahead. And so gold prices are going to go parabolic.
Silver's recent closing price of approximately $31 per ounce, levels not seen since January 2013, signals a bullish trend in the market. The $30 mark serves as a critical psychological barrier, and breaking through this level could attract increased investor interest and further price appreciation. Peter Schiff asserts that silver is significantly undervalued compared to gold, as evidenced by the gold-silver ratio, which indicates silver's relative cheapness. He notes that historically, silver peaked at $50 in 1980, and few commodities are priced lower today than they were then, making silver a compelling bargain. While the stock market has grown, Schiff believes it remains overpriced relative to gold, suggesting the potential for a market correction ahead. Peter Schiff argues that inflation is increasing, primarily fueled by the Federal Reserve's ongoing practices of monetizing government debt. With government deficits reaching record highs, he foresees an impending surge in inflation, particularly if the Fed returns to quantitative easing, which he believes could happen as early as next year. Schiff cautions that although short-term interest rate cuts might offer brief relief, they will likely exacerbate inflationary pressures, creating challenges for the Federal Reserve to manage the economic fallout effectively. As inflation accelerates, the Fed's monetary policies may struggle to contain the rising cost of living, leading to broader economic instability.
Silver is cheap. And again, I've thought that for a long time, and it's been cheap for a long time. I mean, if you look at the gold-silver ratio, silver is cheap relative to gold. And so the price of silver has got to go up. I mean, there's nothing guaranteed in life, but to me, this is about as close as you're going to get. Silver prices are going to go up, right? Silver was $50 in 1980. How many things could you buy today for less than they cost in 1980? I mean, other than electronics, right? Like a television or something, but a commodity? I mean, silver is a bargain. You got to buy it. I mean, I've been talking about it for years. I remember when silver was under $5, under $4, when the century started. So it's been going up, but it was so cheap, in 2000, 2001, with $4 or $5. Gold was under $300 an ounce. Gold has gone up more than 10x so far this century. It's almost, not quite 10, but nine times. The Dow is only up a little over 4 times. The Dow was about 10,000. Now it's a little over 40,000. So in terms of gold, the Dow has actually gone down. But it's still, I think, expensive relative to gold if you take a broader historic look at it. So the stock market is expensive. What's also cheap is oil. Oil prices are very cheap. You can get almost 40 barrels of oil for an ounce of gold. That is historically cheap. That means that oil prices are not going to stay at this level. They are going up. And that is bad news for the CPI because it's going to weigh heavily into headline CPI. But all this, I think, is going to occur against the backdrop of a U.S. recession, which means real interest rates plunge even more than nominal rates. We go back to quantitative easing. And that's going to send, gold and silver to new highs. So, where does inflation come from? It comes from the Federal Reserve monetizing government debt. Well, government deficits have never been this large. And so we're going to have more inflation than ever before. It's just a question of when does the Fed go back to QE? And I think it happens early next year. The rate cuts are just the beginning. The QE is the next part because the Fed wants to get long-term interest rates back down. It wants to help the housing market. Well, just cutting short rates isn't going to do that. In fact, long-term rates are likely to rise despite these rate cuts because they are inflationary, and the Fed does not control the long end of the curve, which has to price in the higher inflation that results from the easier monetary policy. So I think at some point, the Fed is going to go back to QE in order to artificially suppress the longer end of the curve because it can print money and buy those bonds to push down the yield. But that's just even more inflation. And so it's coming, and again, the politicians are not leveling with the public. They're saying we don't have to have any cuts to government spending. We can get all the Social Security we were promised. In fact, we can get more. Donald Trump says, hey, we're not even going to tax your Social Security benefits. So we're going to get more Social Security benefits. We're going to have lower taxes. Well, that means we're going to have higher inflation because we have to pay for government somehow. And it's clear the only way politicians are willing to charge us for government is through inflation, because then they can blame it on somebody else. They don't have to accept the responsibility because they didn't physically take our money. They just took our purchasing power by creating money, and now they can blame it on, greedy businessmen or Putin or speculators or whoever is the scapegoat of choice. But they won't accept responsibility. So we're going to have a lot more inflation. I do think that the Fed's rate cut cycle is going to get aborted before they get back down to zero. I mean, I don't know that they'll make it all the way back down because I think that the foreign exchange markets may not cooperate, and we could go into a free fall with the dollar. Inflation could really start to get out of control. And so the Fed may have to start hiking rates in order to stop it.
The upcoming BRICS Summit in October is poised to unveil a new multipolar financial order led by China and Russia. A key topic will be the unit, designed as an alternative to the dollar-centric global financial system, facilitating trade without reliance on the US dollar. This unit may be pegged 40% to gold and 60% to a basket of BRICS currencies. While transitions may take time, the momentum for change suggests a significant evolution in the global economic landscape. Share your thoughts on Peter's analysis in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.